Hello, Michael Bull here with the Commercial Real Estate Show. We're in Las Vegas at ICSC Recon 15. We've caught up with Dave Henry with Kimco. Dave, great to see you.
Nice to see you again, Michael.
Well, we appreciate you being with us today. And, well, a great conference. The retail market seems to be picking up a bit. People are interested in investing. You guys had great numbers for the first quarter. What's going on in your market?
Well, basically, the fundamentals are very strong in the shopping center business, and I think you see it right here at the convention. I think attendance will be just under 40,000 people. All of your closest best friends will be wandering around these halls for the next 2.5 days. But basically, occupancies are up, rents are up for us landlords, and I think it's all goes back to the fact that there's very limited new supply for the past 6 years. This is a country that used to build something like 2,000 shopping centers a year, and even though new development has ticked up to maybe 200 a year, that's still a tenth of what we used to do. And so that helps us on the landlord side. Doesn't help the retailers. They're having to pay a little more rent and so forth, but it certainly made the fundamentals of our business much stronger.
And how is this impacting the tenants? Are some tenants having problems finding the right spaces to be in? What is the sentiment of the tenants today?
Well, most of the national retailers you'll see here today are still committed to very robust expansion plans. What they're worried about is finding the stores to do that. So you take the Marshalls of the world and the Ross stores of the world, the Bed Bath & Beyonds, they're committed to growing their store counts quite a bit. And as the inventory goes down, as our occupancy goes up, that's making it harder. So they either have to pay higher rents for vacant stores, or go to secondary markets or B locations and things like that. So it's giving them a little bit of trouble. So they'd like to see some more new development.
Okay. And how are your shop tenants doing, the smaller tenants in these developments where I guess the anchors are doing fine? How about the little guys?
Well, that's probably the most encouraging thing of this past year. Finally, after 5 years of softness with the mom and pops and the small stores, we're seeing small shop occupancies increase. Finally, it's come back up. So your local jewelry store finally is opening that second store. Your dry cleaners finally expanding. Those guys have been on their backs for the past 5 years since the recession. Their financing has generally come from community banks, home equity lines. That's finally coming back. So we're actually very encouraged about the small shop space, because that's where there's good upside for most of us landlords.
And that's a great sign for the economy, isn't it? And how is the economy with consumer confidence? Where do consumers fit into this thing?
Well, there's a lot of mixed readings for the past year and a half, quite frankly. Most retailers have reported mixed results. Some blame it on the weather, some blame it on the seasonal factors. But consumer spending is not robust. Most retailers will tell you that their margins are squeezed. If you're in the fashion business particularly, there's been no apparel price inflation for many, many years. So retailers are having a little bit of a tougher time, especially the retailers, I would say, in the middle. The very high end is doing just fine, and the very low end, the dollar stores, continue to be profitable and continue to expand. But the guys in the middle, the Sears, the Pennies, the Macy's, they're still trying to find the right mix of products and the right things where they can get margin.
Right. We're talking with Dave Henry at Kimco, and creativity is one of your core principles. So what are you guys doing creative these days?
Well, I think when you talk to most landlords here today, you'll find the most accretive place and the most profitable place for us to invest capital is back in our own property. So it's all about redevelopment. It's about creating a second phase, buying the property across the street and incorporating it within your shopping center. It's about upgrading your shopping center, putting some more money into it, making it more attractive. It's about attracting more shoppers to your shopping center so your retailers do better, so you can charge them more rent, quite frankly. And there's the trend to make shopping centers more 24-hour centers, if you will. So we're talking about putting in more theaters, more restaurants, more health clubs, because you want activity in your centers more than just 9 to 5. So it's all about creating a better experience, especially since most of our brick and mortar retail tenants are competing with online merchants. So it's about getting people to want to get in their car and come to the shopping center and shop with your tenants.
And how is online sales impacting the brick and mortar today? I think some people think it's a bigger impact than it is. What do you guys see, and what are your retailers telling you about that?
Well, it's interesting. This whole concept of omni-channel is real. Most of the good retailers have found a way to blend their online shopping marketing channel with their brick and mortar. So the brick and mortar stores become showrooms and fulfillment centers to help with the online sales. And the most telling thing to us is retailer after retailer tells us if they close a store in a given market, they lose online sales in that market. Macy's, for example, told us when they closed their Bloomingdale's store in the Mall of America in Minneapolis, they lost 70% of their online sales in Minneapolis right away. So there is this synergistic impact between the online business of a retailer and their brick and mortar, and it's coming together. I think, for instance, you will see Amazon eventually open up showroom stores, very similar to Apple stores. They've seen the success of Apple showcasing their goods. So if Amazon really wants to sell smartphones, the latest Kindle tablets, Fire tablets, all that sort of stuff, they're going to have showroom space, which is good for us because they'll be renting space for us someday. So I think online is a factor, and it has hurt certain tenants in particular, the Borders bookstores, for instance, and the Circuit Cities. They're long gone, primarily because of online. But in general, it's not quite the threat it used to be. The retailers have found a way. They really need both.
Yeah, it can really be impactful and help these brick and mortar tenants, can it? What about technology? How is technology impacting your centers and your tenants today?
Well, let me just add one more point about online. 70% of the U.S. economy is still services. So whether it's health clubs or nail salons or restaurant, you can't buy that stuff, your haircut. You can't do that on the internet. So that's also helpful that most of our shopping centers have a lot of service-oriented tenants. In terms of technology, everybody's using their smartphone today to be better shoppers, and part of attracting shoppers to our centers is providing, for instance, free Wi-Fi. So in our bigger shopping centers, we're providing free Wi-Fi. In some of them, we have electric car charging stations. It's all about making it easier for the shoppers to come to you, and technology is part of that.
That's interesting. I noticed here at ICSC they're using beacons around the conference center, so we can have an app and they can know we're walking by and sell us something, right?
Well, it's amazing. There is software that we use and other landlords use that basically count the number of cell phones that are turned on in your shopping center at a certain hour. So it's an easy way to track traffic in a shopping center. It simply tells you X thousands of smartphones are turned on, and you can graph that and see how that's going. So it's a cheap way to monitor traffic.
That's nice. What are some of the initiatives you guys are doing at Kimco? I know you sold some assets that are outside the U.S. What's next for Kimco?
Well, we know that it's a hot market and a great time to be a seller. That we know. Being a buyer is not so certain because prices have recovered and then some in some markets. So we're trying to sell into this window of opportunity our second tier assets and some of the markets we don't want to be in long term. So we've sold literally billions of shopping centers over the last several years as we try to make our portfolio much better quality, much stronger growth long term, much higher rents long term. So that's definitely one of our initiatives. Like many REITs, we've also pulled back from some of our international operations. We've sold most of our assets in Latin America. We still have a big portfolio in Canada, which we're proud of, but the Canadian dollar has hurt us a bit recently, which refocuses your mind on your core market.
How about new development? Are you guys involved in new development, and is it just strictly retail, or are you getting into more mixed use as well?
Well, for the first time in 6 years since the recession, we are finally jumping back into the new development. So We have a portfolio of about 750 shopping centers. We're building 4 new ones in various markets: Houston, Fort Lauderdale, Christiana, Delaware, and Philadelphia. We have new projects going in all those markets, and we're excited about them. In one case, it really represents a very large second phase to something we have that's very successful in Fort Lauderdale, and the numbers are beginning to make a little more sense. But it's not a wave of new construction at all. But we are dipping our toe into development if we can get the returns.
Who are your anchor tenants in these new developments?
Generally, the specialty grocers are growing like weeds. So the Whole Foods, the Trader Joe's of the world, the fresh markets, they will anchor. Super Walmarts are back doing some new deals. Even Target, believe it or not, is doing some new deals. Costco is another expansion-oriented, a great retailer that's got a food bent to it. But generally, a food component is important in a new development because the food component drives traffic. Your average shopper is in his grocery store 2 or 3 times a week versus once a month. So you want a grocer if you can.
What about mixed use? What do you feel about mixed use? Are you guys involved in it? How do you like it?
To a limited extent, especially in the urban areas. Most towns like mixed use. They like apartments on top of retail, and
They think it's all going to work.
and they love the renderings. They love the pictures, but it's a tricky business, especially if it's not your core expertise. In our case, having simple one-story retail buildings is our core expertise. Building an office tower or a 16-story apartment building above a Costco is a little more tricky for us. So there are certain areas, including we have a project across the street from the Pentagon, where we are going to put some residential on top of that, but we're going to do it very deliberately and very carefully.
Are you joint venturing that residential development, or are you guys doing it?
No, we're probably going to bring in third-party expertise, third-party general contractor, third-party leasing and management people. But in terms of joint venturing with another institution as an operating partner, it gets tricky because then you're not necessarily aligned because remember, we still own 100% of the retail. So if we own the residential 50-50 or somebody else owned the residential and you're in a development game, it might get too tricky.
Yeah. Well, Dave, if you could end our interview today with a tip, maybe for a tenant or for an investor or a landlord in the retail world.
Well, let's see.
Buy low, sell high, right?
Well, yeah, I'd say be careful on the buy side today because these are historic low interest rates, and you've seen over the last couple of weeks how volatile interest rates are. So the 10-year has jumped 30, 40 basis points, and it's caused mass panic from everything for people selling down REITs to pulling back on buying projects. So in general, I'd say it's a very good time to be careful. But I think the fundamentals of retail are strong. So if you're looking at different property types, whether it's hotels or self-storage or office, I think retail holds its own today because the supply has been so muted. And it's so difficult to build in a lot of markets. So I think it's a good investment category for people.
And is that one of the factors impacting the cap rate compression today, that investors are feeling like they're going to have rate growth in some of these markets because of the lack of new construction and construction costs going up?
No, I think it's more high level. Capital and money is rushing back into real estate in general. Real estate is a hard asset. And real estate, generally income properties, provide a very high yield compared to the alternatives. So when treasury bonds and corporate bonds and other investments yield virtually nothing, buying real estate, even if it's at a 4 or 5 or 6 cap rate, is very attractive. So all those pension funds and life companies and sovereign wealth funds that ran out of real estate 6 years ago are all rushing back in, and that's pushing up demand for good quality real estate because they generally want the same thing. They want the best properties in the best markets. So you're seeing the cap rates for this better quality stuff go way down, prices go way up.
Yeah. It's amazing. So it comes down to supply and demand, doesn't it?
It always does.
Yeah.
And you have to remind yourself all the time that commercial real estate is a cyclical business, always has been a cyclical business, and always will be. So there's no paradigm shift of 3% cap rates forever going on here. So you just got to be a little careful about what you're doing.
Great, Dave. Thanks for joining us today.
You're very welcome, Mike.
Michael Bullitt, ICSC Recon 15 in Las Vegas.
The Commercial Real Estate Show is brought to you by Bull Realty Commercial Advisors, a great place to do business. Visit bullrealty.com. RealNex, a comprehensive and powerful suite of commercial real estate tools at an incredibly low price. Visit realnex.com. That's REALNEX. Xceligent, the resource professionals use for commercial real estate information. Visit xceligent.com. That's XCELIGENT. Commercial Search, the source to market and source available properties for sale or lease. Visit commercialsearch.com. For more information on these great companies or for additional videos, podcasts, or articles, visit CREshow.com.